Okay, let's take a quick trip to October 30th, 2025, because on this one single day, the market was a real tale of two extremes. You had these massive, optimistic government bets on the future, clashing with some pretty stark warnings about the hidden risks of right now. So let's break it all down.
And it all starts with this number, $5 trillion. I mean, that's the staggering valuation Nvidia hit on this day. It's a figure that it almost seems unreal, doesn't it? It perfectly captures the sheer scale and the explosive energy that was driving one side of our story.
And that really gets us to the heart of what we're talking about today. We're looking at a market that's being pulled in two completely different directions. On one side, you've got pure propulsion, right? Innovation, huge investments, AI-fueled growth just going vertical. And on the other side, you've got prudence, regulation, trying to manage risk, and paying super close attention to the fine print. Let's see how this all played out, and we're going to start in Britain. First up, the UK government. They basically went all in on innovation, placing some absolutely enormous bets on what's coming next. The headline number here was a landmark £55 billion, all committed to research and development. Now, to put that in perspective, this is the largest single investment ever made by their Department for Science, Innovation, and Technology. That is a truly massive statement of intent.
So you might be asking, what's the goal behind a number that big? Well, as the Work and Pensions Secretary, Liz Kendall, put it, this investment is seen as absolutely critical to growing the economy and creating good jobs. So, this isn't just about science for the sake of science. It's a really strategic move to build economic muscle in a world that's being totally reshaped by AI.
So where's all this cash actually going? Well, the investment is targeting some of our biggest societal challenges, things like health, AI safety, and climate change. And the government is expecting a pretty significant payoff here. They're projecting that for every single pound they invest, it's going to generate £8 in economic benefit down the line.
And it wasn't just the public sector getting in on the action. The private sector was echoing this exact same optimism. You had the American data center giant Equinix announcing they were pouring nearly £4 billion into a new campus just outside of London.
This project was immediately framed as a huge vote of confidence in the UK's digital infrastructure. It's said to be the largest in Europe, all primed for the insane demands of AI. And it's expected to create £1.1 billion in annual GVA. And GVA, if you're not familiar, is just a direct measure of its contribution to the economy. This is the propulsion side of our story in a nutshell, literally building the future. But at the very same time, regulators were sounding a major alarm.
So let's flip the coin and look at the other side, prudence. While all these big bets were being placed on the future, regulators were laser-focused on the high-stakes risks of the here and now.
And the center of all this concern was a financial product called contracts for difference, or CFDs. Now, in simple terms, these things let you bet on whether an asset's price will go up or down. You use leverage, and you never actually own the thing you're betting on. The key takeaway, they are extremely high risk.
And if you need proof of just how risky they are, look at this. According to the UK's financial regulator, a staggering 80% of retail investors who trade these things lose money. Only 1 in 5 comes out ahead or even breaks even. That is a brutal reality check. So here's the crucial warning the regulators issued. They said some brokers were pushing investors to get recategorized as professional clients. Now, if you agree to this, you lose vital protections. Your leverage isn't capped anymore. You can actually lose more money than you even deposited in the first place. And you lose access to the official dispute resolution service if things go wrong. It's a massive, massive gamble.
And hey, this cautious vibe wasn't just in the UK. Across the Atlantic, the US Federal Reserve was signaling prudence too. They cut interest rates, sure, but only by a little bit, basically pouring cold water on any hopes for more aggressive cuts. It was just another sign of the big institutions kind of tapping the brakes amidst all the market excitement.
But that excitement, that exuberance, it was absolutely undeniable. And nowhere was that more obvious than with the day's biggest star, Nvidia. Just take a look at this chart to get some real perspective. On this day, Nvidia became the first company to ever break a $5 trillion valuation. It wasn't just joining the club with Apple and Microsoft anymore. It was leaping way ahead of them into a league completely of its own, all powered by the AI boom. And to make that abstract number feel a little more real,
Listen to this story. A simple $1,000 investment in Nvidia back in 2015, by this day in 2025, it would have been worth an incredible $441,000. Now that is the life-changing power of the propulsion we're talking about.
So for our final section, let's look at how these two forces, this incredible propulsion and this careful prudence, come together in the really nuanced world of corporate finance, where, the fine print really matters.
So, take Amundi, Europe's biggest asset manager. If you just looked at the headlines, they were absolutely flying. Record assets under management, huge inflows of new money, but their share price was actually falling. And this is where prudence comes in. The fine print revealed that investors were worried about a business pact, rising costs, and currency fluctuations. All these little details were actually overriding the big positive numbers.
And you could see this pattern playing out all over the investment world. Behind the soaring market, you find these really complex, detailed stories, a strategic takeover to control a logistics empire, a new chairman brought in to fix corporate governance, and a fierce proxy battle, which is basically when an activist investor tries to convince other shareholders to vote with them and force a change at a company, all because of disappointing returns. See? It's all in the details.
And really, this is what it all comes down to. The market on this day wasn't just one thing. It was this incredible place where amazing forward momentum was paired with intense caution. For every massive leap forward, there were these careful, discerning steps being taken to manage risk and navigate all the details.
Which leaves us with a final question for you to think about. In a world of $5 trillion companies on one hand and 80% loss rates on the other, which is more important for understanding what's really going on? Is it the spectacular headline or is it the crucial fine print? Something to chew on. Thanks for watching.